right, back with our coverage of the RBI monetary policy decision. The RBI Governor keeping the rates unchanged, but keeping the policy supportive in favor of growth. And in fact, as we speak, we're seeing the Indian markets also giving up some of the gains after the monetary policy. In fact, SENSEX and Nifty both are seeing cuts coming in of almost about 100 odd points on the Sensex. The Nifty also down about 0.2%. Among the losers, we have the likes of Nestle, L&T, Reliance, IOC, where we are seeing some weakness coming in. But let's take it across to Tanvee Gupta Jain. She's joining in today on ET Now. Hi Tanvee, good morning. This is Ruchi Bhatia. Let me first begin by asking you on your first thoughts. Pretty much stuck to the script, the RBI governor, but saying that going forward, they do expect that growth is going to come down from 10.5% to 9.5%. How are you looking at the announcements made by the governor today?
Good morning, Ruchi. I would say yes, as you pointed out, the policy was largely on expected lines, but a couple of things definitely I would like to highlight. One, they have revised their GDP growth forecast from 10.5 to 9.5, but if you compare with UBS FY22 GDP growth outlook, we are still at 8.9%. So on that basis, I would say RBI's forecasts are still looking a bit optimistic, but again, there is always a room for revision later, depending upon how the COVID-19 situation is evolving. Again, what is more interesting is that while they have only revised the full year FY22 inflation outlook by 10 basis points from an average of 5 to 5.1%, what they are estimating for the full year, if you look at quarter 2 and quarter 3, the estimates have been revised by almost 20 to 40 basis points. So definitely in the near term, there are supply side bottlenecks that could be leading to high inflationary pressures. So my take will be that if you look at the repo rate or the monetary policy, it has been accommodative, and the policy rates in India are almost at an all-time low at 4%. Yet your credit impulse in the Indian economy continue to remain weak, largely because the households are facing income uncertainty, the business are facing pandemic uncertainty, the banks are risk-averse to lending. I don't really see any incremental benefit of monetary policy going forward. The best is you keep the policy stance accommodative, keep rates lower for longer, just to ensure you're providing some support to the economic recovery post-COVID-19 shock. But there's that much what a monetary policy can do, and I think that is where we are on the overall policy outlook.
Tanvee, as you yourself said, the policy really in the past, the RBI's very accommodative policy has not really helped move the needle as far as growth and credit is concerned. So what is the case really for continuing it? Is it like pushing on a thread?
Okay, so I will say in a scenario whenever there is an economic shock, in economics we say that it's always a fiscal policy which should be taking the first lead, which should be complemented by a monetary policy. In India, we have seen exactly the opposite. The monetary policy has been very proactive throughout, even since last year, whereas fiscal policy has been taking, a little bit up and down depending upon, because our fiscal situation is very stretched at the moment. At this point in time, definitely what we need at the moment, that while the monetary policy remain loose, what we are seeing on the ground, we definitely need the government, whatever spending commitments they have presented in the union budget, to actually take it forward, specifically with regard to capital spending. And obviously the biggest crux in this entire economic shock, that it's more a health crisis. So it's a ramp up in vaccination pace is the only way to cut down on the duration of the crisis. So I would say monetary policy is doing all they can do by keeping rates lower for longer, so that you cut down on the leverage costs, you cut down on the borrowing costs for the corporates, for the household, but efficacy of any incremental monetary easing is quite limited at the moment.
I mean, there was no question of easing in any case, given where inflation is. But my question really is that given the fact that growth hasn't really, moved up, inflation on the contrary has, could the commentary have been just a little less dovish? We already have a GSAP 2.0 for a higher limit. So what is the point of flooding the system with liquidity? It's clearly only going to asset price bubbles. Look at where the stock market is. Look at where commodity prices are. And look at where the inflation is. And look at the recovery. So is there some case where the RBI could have been a little bit more, not hawkish, but certainly less dovish?
I would say it is not only an India problem. Globally, we are seeing that inflationary pressures are rising up. So it's not only India-centric, but again, the weight of imported commodities in our CPI index is only 22%, whereas in WPI, it's more than 45-50%. So there's a big difference why you are still seeing CPI around 4.5%, which might go up somewhere around to 5.5%, but your WPI inflation remaining at 10%. So I would say from an inflation perspective alone, at this point in time, definitely growth is a priority. And the solace for the policymakers is that excess liquidity might be chasing risky asset, but at least it's not really reflected in the larger economy because your credit growth continues to remain muted. However, at some point in time, you have to think about normalization because it's not that excess liquidity can be created in the system forever, because it can lead to macro risk, including inflationary pressures building up at a point in time. So our sense is that from March quarter of 2022, we do expect normalization in policy to happen, whether it starts in the form of a reverse repo rate hike or doing gradual withdrawing of the liquidity from the system. But at some point in time, RBI cannot ignore inflation risk, even if for the next 3 to 6 months, they can inflation on the stride and focus on growth at the moment.
Okay, Tanvee, we will wait for that point of time, but I'm afraid it's time for us now to wind up this wonderful show. Thank you so much for taking part and sharing your views with our viewers.